Hey everyone, welcome back to Corporate Decoder, the place where we unpack the financial secrets that CEOs hope you never see. Today we are diving into Nuvve Holding Corp's latest filing to see what is really going on beneath the surface. Before we get started, if you want to stay ahead of the corporate curve and understand what these filings truly mean, do us a favor and hit that subscribe button. Also, we have a fantastic community over on Discord all about breaking down these reports, so check out the link in the description below. So what is the big news with Nuvve Holding Corp? Well, they've entered into another agreement that involves issuing new notes and warrants. Basically, they are raising more money by offering investors a chance to buy debt that can be turned into company stock or warrants that give them the right to buy stock at a set price. This is pretty common for companies needing cash, especially when they are not yet profitable. This filing specifically talks about an additional issuance of senior convertible promissory notes and accompanying warrants. Think of it like this: the company sells a note which is a loan to the investor. This note can be converted into shares of Nuvve's common stock if the stock price goes up or stays high enough. Along with the note, they also give the investor warrants, which are like options to buy more stock later at a fixed price. The company issued a senior convertible promissory note for $277,777. They also issued new warrants. This is part of a deal they made back in October of 2024, where they had already agreed to sell these types of securities. This is just them exercising an additional investment right to get more money from those original investors. Now let's talk about the terms of this new note. It matures 18 months from when it was issued. The company has the option to extend that by another 6 months if they've paid off or converted at least a third of the principal amount, and if everything is going well with the company, no defaults or major problems. If they do extend it, they have to pay the investor 6 months of interest upfront. The investors have the power to convert this note into shares of Nuvve's common stock at any time. The conversion price is set at 13 cents and 84 hundredths of a cent per share. This price is calculated as 95% of the average of the 5 lowest trading prices over the 10 trading days before the investor decided to make this additional investment. This is a pretty standard way to set a conversion price to make it attractive to investors. The conversion price also has protection. It has what is called a full ratchet anti-dilution protection, which sounds complicated but basically means if Nuvve sells stock at a lower price, later the conversion price for this note will be adjusted down to match that lower price. There are some exceptions to this, but it is designed to ensure investors don't get a raw deal if the stock price plummets. What happens if things go really wrong? If an event of default occurs, things change. The conversion price can switch to an alternate conversion price. This alternate price is a bit more complex and involves looking at various trading prices and volume-weighted average prices on specific days. The floor price mentioned here, meaning $0.528, is important because the alternate conversion price will never go above this floor price. The note accrues interest at 8% per year, but if something goes wrong, an event of default happens, that interest rate shoots up to 18% per year. The payments for both principal and interest are due in equal monthly installments starting potentially in January of 2026. Here is an interesting part about those monthly payments. They are usually paid in cash. However, if Nuvve meets certain conditions related to its equity performance, they can choose to pay all or part of these installments with shares of common stock. The price at which they issue these shares is called the installment conversion price, and it is tied to the conversion price or a percentage of recent trading averages. There is also a cap on ownership. Investors can't convert the note or receive shares if doing so would make them and their affiliates own more than 9.99% of Nuvve's total outstanding stock. This is to prevent any single investor from gaining too much control through these conversions. Now let's look at the warrants. These additional warrants are exercisable immediately and will expire 5 years after they were issued. They can be exercised on a cashless basis. This means investors might be able to get shares without paying cash if a major company event happens like a merger, or if the shares they are entitled to cannot be easily resolved. The exercise price for these warrants is also 13 cents and 84 hundredths of a cent per share, and it also has anti-dilution protection similar to the note. The company received $250,000 in gross proceeds from this deal before accounting for expenses. They plan to use this money for working capital and general corporate purposes. This is a relatively small amount of money in the grand scheme of things for a public company. The sale of these securities was made under a private placement exemption from registration. This means they did not have to go through the full registration process with the SEC they sold them, only to accredited investors who meet certain income or net worth requirements. This is a common way for companies to raise capital quickly without the extensive delays of a public offering. Overall, this filing tells a story. Nuvve Holding Corp is continuing to raise funds through convertible debt and warrants. While this provides them with much needed capital, it also creates potential dilution for existing shareholders, as more shares can be issued. The terms seem designed to attract investors with protections against price drops. Looking at the numbers from this deal, $250,000 is not a huge sum, but it is another step in their ongoing financing efforts. The key here is how Nuvve manages its operations with this new capital, and whether it can generate enough revenue and eventually profit to offset the dilution caused by these convertible instruments. For Nuvve Holding Corp, the company is clearly in a growth or turnaround phase where raising capital through debt that can convert to equity is a primary strategy. This comes with the inherent risk of shareholder dilution if the stock price does not appreciate significantly. The company's continued reliance on these types of financing suggests they are still working towards achieving sustainable profitability and establishing a stronger market position. The main opportunity for Nuvve lies in its technology and market potential. If they can successfully execute their business plan and capture market share, the value of their common stock could rise significantly, making the conversion of these notes and the exercise of warrants beneficial for both the company and the investors. However, the risks are substantial. The current trading prices and the conversion strategy indicate that the company's stock has not reached valuations that would make these instruments particularly onerous to convert yet. But if the stock price remains suppressed, the company could face difficulty in repaying its debt obligations without issuing a large number of shares. In conclusion, Nuvve Holding Corp is navigating a challenging financial landscape by continuing to access capital markets through convertible debt. This strategy provides immediate funds but carries long-term implications for existing shareholders due to potential dilution. Investors need to closely monitor the company's operational performance and its ability to grow its revenue and improve its financial health to justify these ongoing financing activities. Alright, that is our breakdown of Nuvve Holding Corp's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.